Welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities. My name is Ryan.
My name is Lucas, and let's talk about some opportunities which come in the face where they say when there's blood in the streets, buy even if it's your own, or sometimes if there's blood in the streets, don't buy and see if maybe there's a reason why it's bleeding and maybe you should leave it alone. I guess what we should talk about is we like to talk about blockchain, crypto, innovation, and there are a whole host of different projects and protocols and blockchains. We look at market caps, we talk about stable coins and DeFi. And just because it's built on a blockchain doesn't mean it's decentralized and doesn't mean it's secure. It can be highly centralized and it could be completely opposite what you would think is DeFi or in that regard, right. Banking the unbanked and being your own bank. And so one of those blockchains that comes up in the news a lot, having an issue with being more centralized and having more control, is Solana. Solana, although it's been popular in the last couple of years, a lot of that popularity people feel has been due to venture capital support and a lot of its growth occurred when the EVM space was really blowing up, and DeFi, the DeFi, for lack of a better word, bubble was forming, and we saw that Ethereum, we had a real hard time scaling. Gas fees were crazy, and so all these layer twos and essentially forks of Ethereum as well started popping up, and Solana was one of them. And they have thriving, and they also capitalized, like you mentioned, on DeFi, the NFT. Solana really capitalized with the success Ethereum had with NFTs, with an NFT ecosystem they provided,
And one of the things that was a selling point for them was that they would do quick transactions, right? Really cheap and fast transactions. But one of the things we like to point out in crypto is that there's always trade-offs. So Ethereum is slow and has gas fees, and maybe isn't the most scalable protocol, but what you get for that is you get true decentralization, and you don't have some of the problems that you have with with other chains because of how decentralized it is. Whereas Solana, they've made a compromise where they have scalability and quickness and cheap gas fees, but it's at the expense of decentralization. So it's much more centralized, and we see that it's been fragile, right? There's been lots of down periods.
When you mention centralization, decentralization, we're talking about the security. Ethereum is highly decentralized. It's also highly secure. Solana, due to its centralization and its fragility, there have been times where they've needed to stop the blockchain and fix things and then get things going again. And so here we're talking about another issue with Solana.
Yeah, this is actually historic. What's going on is and this is a theme that we're seeing play out right now. So you're gonna hear the same story, and it's happening on Solana as well. So there is a lending protocol on Solana called Solend. And essentially the story is that there was a whale who put a bunch of Solana on Solend as collateral, borrowed against it, took some positions. I'm sure leverage is involved in this. The market's turned against them, right? Everything is going in price, everything's falling. We're in a bear market. So there's been a margin calls have occurred, and essentially the account, the positions that this account has undertaken need to be liquidated. Now the concern is that in doing so, all of this large amount of Solana would be hitting the market and potentially driving price, no doubt would drive prices lower. And the problem with that is that others have also deposited Solana on lending protocols and have taken leverage positions. And if this liquidation of this whale pushes prices to a certain level, it could create a whole nother secondary wave of liquidations where more Solana gets dumped on the market when the prices are at a weak spot, and then you create this like death spiral similar to what happened with Lunaterra. And the fear is that if left unchecked, this could cascade such that the Solana actually just goes to zero, and we could be looking at the end of potentially the end of that project. So in order to,
I think that's a little, whoever wrote this, I don't know,
yeah,
that's a little much.
that might be a little over far, yeah.
Right, because Luna and UST was different considering that they were directly tied to the value of each other as a peg, and that's not the same thing. And here we're talking about DeFi protocols built on Solana where that was used as collateral. So at worst, what you'll really have is a cascading. As the collateral value falls, you'll have a cascading of deleveraging, but it's limited to the amount of people that were pumping up Solana within that DeFi protocol.
Right. It's not the same as Lunaterra, where everybody who redeems UST is minting Luna.
Right.
And it's like an infinite supply increase. Yeah, you're right. These are definitely different mechanisms that are at work.
And I would like to say that what we're seeing here is just a miniature version of what goes on in traditional finance all the time. I mean, the idea that you have too big to fail, or you have entities that due to defaults in their books, they're no longer solvent.
So you know what? One thing I would say though, just to play devil's advocate, is even though you're right that this is not the same mechanism, so that, you know, to think that it would just go to zero, that might be overstated. But but consider also that this whale, I don't know how much Solana we're talking about here, but what if the supply of Solana that's going to be liquidated is a significant amount of, say, a certain exchange? And maybe imagine that the liquidity, since we're in a bear market, in the interest rate hike, and the money's not circulating as quickly as it was. There's a lot of depressed sentiment in crypto. So what if there's not enough buying power on the other side of that trade? And, you know, maybe zero is too far, but you could see a massive movement down, just as a liquidity crisis kind of story, right? And on an exchange, right? Like an OTC, you know, liquidation, you could, if it's a large enough whale, large enough position, it could wipe out the liquidity, you know, quickly on that exchange, right? And so, you know, it's really, that's the mechanism, I guess, that we would be talking about, and how you would get this movement. But I agree with you that that's probably overstated.
And there are multiple exchanges to arbitrage, and it's not just liquidity on one to pull from. And as you mentioned, most likely what they'll do is they'll take a portion of this, and whether to people like Goldman Sachs or other entities offer an exchange off the market, over the counter.
Well, that's kind of what I wanted to talk about now, is that this is one of the key quotes in this article, is that they're going, that they've put a proposal up on Solana. It looks like it's been voted in. So they're going to take these assets from the whale's account, and they're going to liquidate them in a way that the liquidation doesn't create that cascading price drop that we talked about. And well, how many ways can you do that? Well, I mean, obviously one of the ways is don't go OTC, don't sell it on an exchange over the counter. You would call up Goldman or you know, some other hedge fund or Wall Street bank or VC, and say, hey, I have some crypto to sell, you know, at a discount, fire sale prices, you know. So I feel like that's probably the direction this is heading in. And, you know, really it's kind of a irony, I guess. I don't know if irony is there is some irony here, in that we're seeing, you know, cryptocurrency was designed and invented to kind of get away from the unfair, you know, self-dealing kind of practices that you see in Wall Street, between Wall Street and finance and the government, whether it's talking about bailouts or you know, too big to fail, or regulations that prevent competition, or, you know, there's various examples of that. So but we're seeing is that even in DeFi, as Wall Street kind of gets its fangs in and gets its hooks in, that you know, these problems are recreated in a similar way, but they're playing out in certain protocols that tend to be more centralized than others, right? You're not seeing this happening on you know, on, for example, on the IBC as much, right? You're seeing, or in Ethereum just per se, or on Bitcoin. It's really on, it's the Solanas and Lunaterras, and then the CeFi plays like Celsius and Three Arrows Capital and Voyager. That's
In
where
other
these
words,
issues are coming up.
It's not across the board. It's not
No.
just a crypto. It's understanding the nuances of certain. Is it a proof of work? Is it a proof of stake? What are the mechanics? What are the tokenomics behind it? How does it work? And that's what you're seeing here, is that just because it's blockchain or crypto, that doesn't mean that it's equal and that they all
Right.
have the same scalability and security and decentralization. That's the importance of doing your own research. And that's why we provide this educational entertainment information to help you better understand your journey. None of it is financial advice or commercial advice or legal advice or marital advice, but understanding the differences between smart contract platforms and which ones tend to be more decentralized can help you if you decide to join and participate in a community and be a part of that growth and adoption that takes place for those projects that are more, I would say, sustainable, but secure, that
trustless, right? Where, because
trustless.
that's the whole idea is that through decentralization, we don't have to trust the people that are on the other end of these trades, right? Well, it seems that in quasi DeFi, or the CeFi with DeFi with the CeFi, you know, embedded in it, that's not always the case, that there are ways of just basically violating that trust, changing the rules of the game, and, you know, seizing assets, right? So it's important to know what you're investing in, what the nature of the token is, what's the tokenomics is, do you have custody of it or not, and what are the counterparty risks involved if you don't. You know, these are all things that are not obvious or not easy. You do have to do some research, but it's definitely pays to do that research and to have enough wherewithal to where you can download a Web3 wallet, write your keys down, store them in a safe place, and be confident and you know how to use the technology. So you're not trusting Celsius or Three Arrows, and then and eventually find that you're nothing but a unsecured party in a liquidation.
Absolutely. Absolutely. So we'll be here to share that research with you. That is a shame what's happening, but you know, the idea is that, make no bones about it, I think that the Solanas and other smart contract platforms, even layer 2 solutions, they don't claim to be more decentralized. They claim to be able to help provide a speed and cheap transactions at the expense of decentralization. So, you know, it's good to do your research and understand where the risks are. There's trade-offs, like you said. There's always a trade-off when you're looking at blockchain or crypto or markets in general. And it's understanding the risks and what those trade-offs are. Doesn't mean that the blockchain or the technology of the project is bad or doesn't have potential, but it does expose you to certain risks that you may not have on other blockchains. Like you mentioned, there are DeFi protocols that by code, whether it's an AMM or Aave or Curve, there are protocols that just operate at the smart contract level, and the risk
and code is law, right?
Code is law. And but just because it's on the blockchain doesn't mean that's how it operates. And so being able to decipher, and not everyone,
playlists for that.
and yeah, we all make mistakes. So make sure to do your own research and check out our playlist. We do like to go over blockchain crypto projects, especially the innovation going on with secret network and privacy in blockchain. Because look, you talk about Solana and you talk about the problems with EVM, miner extracted value has been another pink elephant in the room of DeFi. So to be able to solve that in crypto moving forward is going to be huge. We will definitely share with you what those solutions are and how you can participate and support them and be a part of that growth. We are living in some evolutionary, revolutionary, amazing times. Take your time to do your research, because this is really, we're setting the stage for you're early. That some of the projects haven't even been developed yet. They're just now getting legs and moving and have utility. So this is the opportunity of a lifetime. Enjoy yourself. Until the next time, have a beautiful day. Namaste.
Thank you.